but we want to talk about these initial claims and these unemployment numbers. James Knightley, the ING chief international economist, is joining us to discuss this. And I want to read a quote from a note that you issued in which you said it's going to be interesting to see what happens in states like Georgia, Tennessee, South Carolina, and Florida. We would assume jobless claims will fall back sharply there as they begin to reopen. Why do you think jobless claims will fall back quickly?
Well, in those states, we're looking at the reopening process. So people reopening restaurants, reopening bars, reopening shops and gyms. So you would assume that they're going to need staff, and therefore you're going to see employment rise once again. So people who have lost their jobs returning to work. But of course, this depends very much on the psychology of the consumer and the household sector. Do they want to go to restaurants? Do they want to go to bars? So I think that dynamic is going to be very interesting because if we do not see people return to these shops in these states, then that's going to really reinforce the view that the prospect of a V-shaped recovery for the US when the broader states start to reopen is not going to happen.
James, thanks for joining us. It's Julie here. So one of your peers, one could say, at another institution, economist Neil Dutta, said yesterday that he thinks that the economy's actually bottomed. That doesn't mean that there will be a V shape. Maybe we'll sort of putter along at the bottom here. Do you think that's right?
I'm hopeful that sort of April will be the nadir. That this is the point that things can't really get much worse. But having said that, there is concern that the job losses we've seen so far have been concentrated in retail and in hospitality. Some of the surveys that you just mentioned earlier, those manufacturing and the services purchasing managers indicators, run the risk that we could start to see more job losses in those sectors. So there could be some broadening out. So that's my slight concern is, yes, things can't really get much worse for retail or hospitality. You can't shut a shop twice. But there is that contagion effect that we see suppliers being hit and other industries being hit. So to call a bottom right now is perhaps a little bit premature. I'd like to see a little bit more data before we can do that.
Some economists are raising the specter of another depression, a Great Depression too, because of this. And they warn that employers are actually going to be unlikely to hire at a pace that they were prior to coronavirus. If that's the case, how long does it take to get the 26 million back into the workforce, all things being perfect, a vaccine, tracing, and testing?
Yeah, to be honest, I think we're going to be seeing structural changes within the US economy and economies around the world as well, because this has opened up new opportunities too. I mean, lots of employers are saying, well, actually, home working can work. Do I need as much office space in the future? Do I need to send my teams off to do as much travel? So there could be longer term implications for the airline industry, for hotel chains, and of course, for hospitality too. So for me, that again runs the risk that these structural changes are going to make the recovery story last longer or take longer to come to fruition. So for us, this peak to trough fall, which we think is probably 13-14% between the fourth quarter of last year and the end of the second quarter of this year, it could be 2022 until we've made all that lost output back.
James, this is Dan Howley. In your note, you say that we could see less than half of working age Americans earning a wage at some point next month. I guess if we do see that kind of prediction come true, what does it take to recover from that? Because those people obviously aren't going to be spending any money. They're going to be holding on to it. So even if stores in places like in Georgia reopen, they're not going to be going in there regardless of whether or not they have fears of lingering coronavirus infection.
Yeah, that is a truly horrifying statistic, I feel, because we've got to remember that basically a third of Americans are either students or they're early retirement or they're carers or they're home workers. They're sort of looking after people at home. So that is a huge proportion. Add in 20% unemployment, and you get to more than half the US population of working age not actually earning a wage. And as you say, getting those jobs back, it could take longer because, as I said, the social distancing is going to remain in place to some extent. We have to be cognizant of the risks that people don't want to take as many flights. People don't want to go to as many restaurants or bars. They don't want to go to physical retail stores so much. So these issues all do make it, for me, the risk that we see a much more prolonged period before we do regain the lost output.
James, it's Brian Chung here. You had a note 2 days ago about the U.S. housing market as well. What are you seeing on that front? Is there a lag effect that tells you that maybe we actually haven't even seen the bottom in that market because the way that payments are structured, people have only missed 1 month of rent payment. They're about to go up on their second month as we hit the first week of May. What are the flashing indicators that you see in that market?
Yeah, so we were looking at mortgage applications for home purchases, and they had dropped very, very steeply indeed over the last 3 or 4 weeks. The encouraging thing was last week, we actually saw a modest uptick. So perhaps that does signify that, we've seen this sort of shock impact. People have seen, so for example, if you put your deposit in the equity market, and you're about to buy a house, that deposit is worth a lot less. So you may not be able to carry through with that transaction. So I think that sort of shock factor has perhaps subsided. I think the encouraging thing is we may be starting to see a bottoming in terms of that collapse in housing demand. And if that's the case, then that will hopefully provide some sort of base for the housing. And of course, that's also important for retail sales, such as building supplies, such as other home furnishings, those sorts of issues. So there are other structural impacts there too.
James, you point out that European countries in some cases are paying 80% up to what is it, £2,500 in the UK of everybody's salaries. Is it too late for the United States to do that, to stabilize, consumer sentiment? And should the US do that?
Yeah, I think Europe and the US went down very different routes. So as you say, in Europe, what we're seeing is pretty much all of the governments are now actually subsidizing private sector pay. So for example, in London, I've got 2 relatives who have been furloughed. So the government is paying 80% of their pay. Fortunately for them, their companies are topping up the other 20%. So they're effectively getting full pay, being furloughed. And then in 2-3 months, when the economy reopens, they can just go straight back to their job. And so therefore, the impact on confidence is going to be much less, perhaps in Europe. Whereas in the US, what we've seen is unemployment benefits being expanded and increased. And we've seen these grants or these loans that can be turned into grants if you keep people on your payroll. But I think, as we've seen with the unemployment numbers, firms have taken the quick decision to actually lay staff off. We've not seen that in the European side.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.